First quarter GDP released today, coming out at a better than expected 1.1% for the first quarter. That takes the annual rate to 3.5%. Components within that, it's the net trade sector that was quite key in the number today. That contributed around 2.7%, and this is basically a story that we'll see continuing to unfold. Mining investment boom is now starting to move more towards a production phase at the moment, so do expect net trade to continue to contribute positively to Australian growth going forward. That said, the domestic demand side of things still quite weak at the moment. If we have a look at data more recently, building approvals starting to flatten out a little bit. Retail sales also a little bit weaker at the margin, and obviously post-budget, consumer confidence has taken quite a hit following the release of the federal budget. The other main factor that we'll look at going forward, NAB business conditions. This is one that I've touched on quite a bit recently. Still showing that business conditions are very weak at the moment, and sub-trend growth expected later this year. So with all of that in mind, we do expect the Reserve Bank to remain on hold certainly for the remainder of the year. That's consistent with market pricing at the moment. Market's certainly looking for potential rate hike second half of 2015. In all, sub-trend growth will occur in the Australian economy over 2014. I know today's number was quite a bit better than expected, but that will start to deteriorate as we move further and further through the year.